Yo, this video is for me, like all the other videos. They're all meant for me. So basically, this was today, Friday, and if you've noticed, there is a daily time frame chart. It's just a mini one. So basically, price was bearish the whole week, and the previous day's candle was a long range candle. It was a long candle, which was on Thursday, the 27th, and today is 28th. So, with that information in mind, we understand that when the previous day was a long range candle, we simply just don't trade the following day because we understand that we're going to be met with difficulties. I'm not even going to go that deep into this shit. So, yeah. So, this is the 28th of February, and we have a 30 handle gap. So, yeah, my rules state that if the gap is less than 40 handles, or less than 75 handles, I simply just don't trade those days. If it's more than 40 handles, I can trade, but I just need to be careful. I need to be careful in the sense that price sometimes tends to do some funny things, if I don't have at least a 75 handle gap. So as you can see here, price created an opening range gap, which is like 30 handles, dropped low from it, and then went up to the first presentation, which is the blue Fair Value gap, closed above it, then retraced to it again, and then started moving higher to the consequent encroachment of the opening range gap, which it fills 70% of the time. Then after doing so, price decides to spend a lot of time in the opening range gap, going up and down, up and down, up and down. As you can see as well, near the consequent encroachment of the gap, I also marked a fair value gap there, and price is chopping up around that a lot, and that's high resistance liquidity. You don't want to be involved in those types of market, and you also need to learn how to see them. So on days like this, you always want to be there and tape read, and not just be like, nah, it's high resistance liquidity, I'm not gonna do anything here, I'm just gonna close the charts. You've got to be on the charts on days like this so that you know how to identify high resistance liquidity days. So that will help you in the future, because if you don't know how to identify them, you'll just be trying to take trades on days like this. How can you identify high resistance liquidity days? Basically, if price action is spending too much time in a fair value gap going up and down inside of it, that's high resistance liquidity. Example, the white fair value gap in the opening range gap, price is going up and down in that. If it was a low resistance liquidity day, price would run into an inefficiency, retrace into it, maybe retrace twice, and then leave. That's low resistance liquidity. And also, if we had a gap more than at least 75 handles, then you'd expect low resistance liquidity days. Yeah, really, the best thing you could do for yourself is knowing how to identify these type of uh trading conditions, these type of conditions. That's going to help you a lot in the future in terms of not risking capital in days like this. And as you can see there, in the first 30 minutes of trading, price was range bound. It was just chopping up, consolidating. You know, you got to be careful when trading the morning session if the previous day's candle was a long candle, because you're going to be met with difficulties like this, since they saw that the previous day's candle was either like a long bullish candle or a small bullish candle. Everyone's trying to get in price and trying to catch what happened or recreate what happened the previous day. So price tends to chop up on days like that, and your setup is more prone to fail in the morning session. So be careful. But all in all, I sat on my hands today, which I love doing. Like, you need to practice sitting on your hands a lot, as a person, in order to save capital. That's something that's going to help you a lot in the future. I am still a demo trader, so I'm practicing the right stuff. You need to practice the right stuff in order to become profitable in anything, actually. If you practice the right stuff and do the right stuff correctly, you are going to be met with an influx of fucking cash. So, yeah, do everything right and you'll be good. You'll be husky. So, yeah, me as a person, I know when I'm going to trade. I'm going to trade when the previous day was not a large range closure or a large range close. I'm going to trade when we have a 75 handle plus opening range gap. I'm going to trade when weakness was shown. I'm going to trade when price didn't spend too much time in inefficiencies. I'm going to trade when there's either a higher time frame liquidity, above or below the market. That's when I'm going to trade. When everything aligns. Also, when it's time for price to move to a certain point, that's when I'm going to trade. So, yeah, take high probability trades. Don't take the low probability trades. It's simple. That's how life works. Of course, if you were to buy a car, you wouldn't want to buy an old car because you're going to have to pay more in terms of maintaining and fixing the car. You would want to buy a new car because you're going to spend less when it comes to maintaining. You're going to pay once, really. So, yeah. I'm going to be switching back to delayed data just for the sake of saving money so that I can open up a live account, And then, yeah. So, for roundabout like 2 months, I'm going to be on delayed data. It's not going to make a difference, really, but it's just that the only difference is I'm not going to be doing demo trades anymore up until I get the live account. So, yeah. The whole plan here is to get a live account, make good bread off it, buy a funded account, and then, yeah, I'm booling from there on. But yeah, the whole purpose of life is, I don't know. Actually, I don't know. I'm trying to sound clever, but shit is not coming out. But yeah, nonetheless, this is the end of the video. Yeah, this was just a little recap for myself. This is how I learn, This is how I learn. Also, this channel was simply made to just track my progress, so that in the future I can watch this back and be like, damn, this is where I started. So yeah, that's the end of the video. That's a wrap.